So the areas that are going to get capital are going to be the ones that are been underinvested for an extended period that we have to keep an eye on. So where do we go from here is really the question. And I think when you're in such an uncertain period, and we showed this slide last week, you go to the areas required spending because that's where you have the greatest degree of certainty to move forward and can look beyond the short term and not be speculating and really thinking about investing. And a lot of this is around the AI trade, obviously, but AI is going to drive and change every industry, every way we work and live. So the areas that are going to get capital are going to be the ones that are been underinvested for an extended period that we have to keep an eye on. I think one of the other key elements, and I think is one of the more underappreciated areas, is the impact of productivity on economies and why the US continues to do as well as it does relative to other areas is since the pandemic, since 2019, we've been able to maintain our productivity and grow it back to pre-pandemic levels where other countries' economies like Europe and the emerging economies have struggled to get productivity back on track. And this is one of the big advantages that the US continues to see, this higher productive growth. And it's going to be even more important when central banks and governments are limited to what they can do fiscally and monetarily to support the system. So I think that's one of the keys. And the other key to keep an eye as you're investing today is follow the money. The US remains a magnet for capital flows, and we're seeing capital flow out of other economies. And what I would suggest is one of the most underappreciated dynamics in the global economy today is the incredible capital flowing into the US today from the trade policies, from foreign direct investment, from capital seeking access to the venture community. So it's very hard to grow your economy, improve productivity when capital is fleeing your area. So in closing, I would say be careful about being seduced by low relative valuations when you're comparing countries, because the underlying balance of the economy is very different. I think what the market is discounting most, as I just said, is the massive amount of capital to be invested in the United States right now and what it's going to do to even accelerate the productivity that we have.